Happy New Year, and welcome to today's dividend investing video. It's hard to believe that 2024 is now behind us as we enter the new year, 2025. It was another excellent year for stocks overall, with the S&P 500 up about 24% over the course of 2024. And I'm especially excited to have an update for you guys. It was 2 years ago when I created the Dividend Growth Income portfolio, starting from nothing. And today I'm going to share the progress that's been made, all of the stocks I own, and now we're able to compare 2 full years of dividend investing with each other. And I was also going to share how I see this portfolio going forward into 2025. So we have a great video today. I'm Nick. This is the Dividend Growth Income channel, and I'm here to share my love of dividend growth investing, as well as the knowledge I've gained in my own experiences and research. But I'm just a regular guy, and I'm not a financial advisor or guru, so just take this for what it is. It's just me sharing my journey and thoughts on dividend growth investing. Investing, as always, does carry risk, so do be careful and invest responsibly. And part of that journey has been to build a publicly viewable account and share transparently this with you guys, the whole account. Here it is, 2 years and a couple months. This account is sitting at nearly $40,000. The account is in Fidelity. Now, I'll admit 2024 was not a great year for this YouTube channel in that I had to take some time away from making videos for personal reasons. Nothing bad or anything, but other things monopolizing my time to the point where I just wasn't able to put in the time to make content consistently. And it takes a significant time commitment to make quality YouTube videos. But look, it's a new year and I'm excited to get back to it. Now, while I've not made a lot of content lately, I've not stopped at all with the consistent investing into this account. Every week I've been adding money into the account. Usually it's a couple $100, $200 or $300. I started adding on Wednesdays, every Wednesday. Towards the end of the year, I was really kind of doing it more on Tuesdays. That's when I'd get the investments in the account, but I did it every week. That was the key. Every week, consistent investment. And let's look at how much I've invested since I've started the account. We'll move over to my spreadsheet tracker right here. But I just think this is really cool to see the growth of this account. I'm really pleased with it for just 2 years, Every dollar I put in the account, I have tracked. In the 2 years of the account, I've added exactly $33,000, oddly enough. I didn't mean for it to come out such a nice round number. It just worked out that way. When I started the account late 2022, I got just under $3,000 in there to start it off. It was the last couple months. Then in 2023, I added $14,400 of new funds into the account. And that averages out to $1,200 a month. Then in 2024, I added $15,650 of new funds into the account. And this averages out to about $1,300 a month. So that's about the rate I was investing in these last couple of years. So you can see I fell just short of this $16,000 goal that I had set initially for 2024. I'm okay with it. I came really close, and I did better than I did in 2023. As for my contribution goal for 2025, I'm going to set it a little lower actually, because for the first half of the year, my focus is going to be a little heavier on a few other things. But the last half of the year, it's going to be even stronger than it was before. It's probably going to balance out. So I've not decided on the amount just yet. We could talk about this more in another video. What I'm doing here more is looking back. But yeah, that's the contributions. That's what I've added. To be transparent, I've added $33,000 in a span of 2 years and a couple months. All right, now let me show you the performance tab. This gives you snapshots month by month and then year by year of how the account has performed, both in terms of gains, unrealized gains, dividend income, and forward income. I'm tracking where that was at each month at the end of the month. In the first full year of investing in 2023, the account grew by 8.39%, or $1,465, and it collected $337 in dividends through 2023. And we ended that year looking at earning about $600 over the next year. So think at, December 31st, 2023, we were projected to get, $600 in 2024. That's if I had sat out, not added any more funds into the account, no more contributions, turned off dividend reinvestment. That's about what it would have done. Probably a little better though, because of every company in this portfolio did raise their dividend in 2024. I'm proud to say that. We ended the year in 2023 with $18,900, almost $19,000, and I was satisfied with that. Then I'm going to move along to 2024. The account performed even stronger. I had a great few months there. It was really looking like it was going to be a solid year up until December hit, which has been the worst month of the account for 2024 at least, down almost 5%. But overall, the account value still climbed 13.5% over the course of 2024. And it doesn't factor in, what the contributions I added, the $15,650 of new contributions on top of the $18,900 that we started the year with. So to be sitting at, around $40,000, to me, we're doing really well. A huge milestone for the account. We actually hit that, but, December had different plans for the account. But the benefit to that being I can add to some of these holdings that, better long-term prices. Long-term, this usually does work out. In 2024, I collected $845.34 in dividends. Compare that to the $337 I collected in 2023 and the $600 I was projected to collect throughout the year. But I kept investing, the dividend snowball increased, and that's just going to grow and grow and grow. I hope I'm illustrating that well. Now, leaving 2024, I have a forward annual income of $1,074.96, which is almost double where we ended a year ago in 2023. Very happy with that. Overall, the account is up almost 19% over the 2 years of the account. That equals out to $6,266.95 in gains. That's both unrealized gains and $1,100 in dividends that were collected and then reinvested. So I love the trajectory of the portfolio. If you told me we'd be sitting at $40,000 a year ago, I would have been tickled. That's 2 years and a couple months of consistent investing. You can be more aggressive than this and probably do better. You could be less aggressive if you don't have quite the amount of money to invest it and be a little slower. But the key is to just do it. Don't try to compare yourself to others. Time in the market beats timing the market, and this is a long-term strategy. The plan for this account is dividend income and to someday pass it along to my daughter. I do have 2 other accounts I invest in at the moment as well. These are retirement accounts. I maxed out my Roth IRA and I also contribute to a 401k at my employer. These accounts are heavier in funds and ETFs. So the account here we have, the dividend growth income portfolio, is a taxable account. And I do have a video coming out on the implications of that, the tax implications. I'll be transparent about how that works with this account for 2024. So make sure you hit that subscribe button to get in on that one. I'm expecting no love from the YouTube algorithm at this time. Okay, let's now bring you to my dashboard. We can easily see most of the important information here. My portfolio's current yield, 2.74%. The yield on cost is at 3.15%. A lot of dividend investors could look at this and wonder why such a low yield. But part of the goal here is not only dividend income, but dividend growth. I'm not using these dividends for income today. If I was, this would look a lot different. I like companies that consistently increase their dividends at rates year over year that exceed inflation. And when I do need this for income, I think I'll be in a much better position following that strategy, both in terms of price appreciation and dividend growth. I especially love the ones that do that consistent double-digit dividend growth. These are getting harder to find as dividend growth has been slowing. The overall market trend in the last couple of years, that's just what's been happening. And the 2 years of having this account, it has paid out nearly $1,200 in dividends. And by this time next year, that amount should be doubled easily. We are sitting on an unrealized gain of over $5,100, 15%. And then you factor in all the dividends reinvested, we have a true gain. It's just a hair under 19%. And from today, we are projected to collect $1,074 in dividend income for the next year. This can be expressed as $90 a month on average, or $20 per week on average, or an average of $3 per day. If I had to use this to pay one of my utility bills, I could, or go out on a nice date once a month, or a nice lunch once a week. But for the time being, the key is dividend reinvestment. And this is one of the keys to increasing that dividend snowball. And I'm excited to see this monthly average amount cross $100, and we're going to do that in 2025. And here's a comparison of my dividend income. Starting out from just getting pennies there in late 2022, it increased in 2023, but once we got into 2024, that's where we started seeing these double-digit months. In my March, June, September, and December, I'm getting over $100 now. I'm getting over $150. I can only imagine how this is going to look in 2025. These January, April, July, October months should be well over the $100 mark. And I'm working on that February, May, August. Those months obviously are my lowest months, but that doesn't really matter too much in the scheme of things. Okay, now let's look at the holdings themselves, the stocks and ETFs I hold. I think it's more useful to look at things by weight in descending order so we can see what we have the most of. This, at the top is where we're the heaviest. My top 3 holdings are ETFs. It's always been these 3 ETFs, although I have let them fall in weight over 2024 just because I put so much into the S&P 500 in my work 401k and Roth IRA, and I have a ton of SCHD in my Roth. So I'm not as necessary to be ETF heavy in this account, but I do like having these as my foundation. My largest position is VYM, surprisingly, the Vanguard High Dividend Yield Index. I hold 18.322 shares for a total value of $2,337.70. The position is up 20% in unrealized gains, and it's projected to pay about $64 in dividends over the next year. The ETFs, they're a little trickier to predict as far as the income side of things go, but VYM makes up 5.95%, almost 6% of the portfolio altogether. My next largest position is SCHD, the Schwab US Dividend Equity ETF. Every dividend investor knows this one. I have a significant position in my Roth, over 300 shares there. Here I hold 81.078. They did that stock split a few months ago, 3-to-1, and this is valued at $2,215.05. The position is up just under 13% in unrealized gains, and it's projected to pay about $80 over the next year. And the next position and final ETF in this mix is VOO, the Vanguard S&P 500 ETF. I said it before, I'll say it again, this is my favorite way to invest. It's also, ironically, one of the strongest performing positions in this portfolio. Now I hold 3.814 shares of VOO in this account. It's valued at $2,055.02. I'm up 29% on the position, and it only yields 1.24%. But it's going to pay out probably about $25 over the next year. So the S&P 500 is not a dividend-heavy fund, but the trend does have pretty solid dividend growth if you look at it, believe it or not. And it's just an great easy way anyone can invest without needing to put a whole lot of thought into it. We love the VOO here on this channel. Now for the stocks we hold here. First up is McDonald's, ticker MCD. Known for Big Macs and being a solid blue chip dividend stock, my position is 5.77 shares valued at $1,672.67. Position is up just over 9% right now. Shares are yielding 2.44%. And I projected to collect $40 to $41 from McDonald's over the next year. Their last dividend raise was at 6%, pretty solid for 2024. And I see them as fairly valued at this time. They're not cheap, but they're not overpriced either. The second stock in the portfolio is Broadcom, ticker AVGO. The semiconductor company is my top performing stock in this account. My position 7.028 shares, and it's valued at $1,629.37. My position is up 184%. Pretty unreal. Shares are yielding about 1% right now, while my own yield on cost is close to 3%. Broadcom's dividend growth streak is strong. Their latest raise was at 11%. I do view this stock as quite overvalued at this time, but it's definitely on a roll, no denying that. The next largest position in the portfolio is the third position. It's Kroger, ticker KR, the giant grocery retailer. I have 24.68 shares valued at $1,509.18. And my position in Kroger has climbed nicely. I'm up 27% in unrealized gains, with shares yielding about 2% right now, and I projected to collect about $31 in dividends over the next year from Kroger. It's a surprisingly strong dividend growth company. Their latest raise was at 10%, and they do that pretty consistently, double-digit dividend raises. I also see them as a fairly valued company at this time. The next largest position in the account is business development company Main Street Capital, ticker MAIN. I hold 25.571 shares of MAIN, valued just under $1,500, and I'm up a surprising 31, almost 32% in MAIN. This is a monthly dividend payer, higher yielding stock at 5% yield. I'm set to collect $75.18 over the next year. And that doesn't count their quarterly special dividend, which should bring in an extra $25, $30 on top of that. I love this one. Dividend growth is slower for Maine. Last year, they raised it at a rate of 2%. This is one I have to boost the income side of things. I never really expected to have better than average gains on a stock like this either, but I'm here for it. I do think it's overpriced to nibble on right now. Next stock in the portfolio is Cisco Systems, ticker CSCO. I hold 25.072 shares of Cisco valued at $1,484, and I'm up 24% on this position. Cisco's yielding 3.28% right now, and should pay about $40 in dividends to the account over the next year. Dividend growth is slow, but consistent at 3%. And I think it's an overvalued stock right now. A lot of these overvalued stocks are as such because they grew into such large positions relative to my others in the portfolio. I promise some of these stocks are going to be undervalued. The next largest position, it's relatively new to the account in 2024, is MasterCard, ticker MA. I hold 2.752 shares of the credit card giant valued at $1,449, and I'm sitting on a 15% price appreciation gain here. Not much of a dividend to talk about, yielding 0.67%, projected to pay me about $8 over the next year. They are, however, a strong dividend growth stock, raising their dividend by 15% last time. And I think today they are sitting at a fair value. And now let's look at Chevron, ticker CVX, the oil and gas giant. I hold 9.801 shares of Chevron valued at $1,419.58. And this is one stock I'm sitting on a loss right now. Not many of those in this portfolio, but I am down 4.5% right now. And that's fine. With Chevron, shares are yielding 4.5%, projected to pay me about $64 over the next year. And the dividend is above average to boot. Their dividend growth has increased by 8% last year. So I love me some Chevron. I'm going to be buying more of this one in 2025, even though I do see it as like fairly valued at this time. Then we have Home Depot, ticker HD, who in the US doesn't have a Home Depot hardware store within 10 minutes of their house, and maybe 20 or 30 if you're out in the rural areas. But they're everywhere, including this portfolio. I hold 3.63 shares of Home Depot. This is valued at $1,414.37, and I'm up over 14% on the position. Shares are yielding 2.3%. It's going to pay me about $32 over the next year from Home Depot. They raised their dividend by 8% last year, and I think they're fairly valued today. A very high quality dividend growth stock right there in Home Depot. I'm happy to hold it. I'd love to see it come down a little bit more. The next one here we have is United Healthcare, ticker UNH. This is a massive managed healthcare company. It's been in the news lately for some unfortunate reasons. I do hold 2.78 shares of UNH valued at over $1,400. And I'm sitting flat on this position right now. It's not really done much. Shares of UNH are yielding 1.66%. It should pay me about $23 over the next year. They do have solid dividend growth stats. Their raise was 12% last time. I think it's undervalued as well. As the first one that I do see is undervalued. I'm going to add that I am growing leery of healthcare investments at the moment, partly due to the political climate and, just around that. With that said, I don't have any immediate plans to make moves, and I'm very happy to hold this one, and that's United Health Group. And then we have Snap-on, ticker SNA. I own 4.1 shares of the industrial machinery company valued at under $1,400. I'm up 28% on this position. It's really gone up in recent months, putting it into that overvalued territory in my position, in my opinion. Shares are yielding 2.5%, and I should earn about $35 in dividends from them in 2025. I do love that dividend growth. Their latest raise is at 15%, so this is one of the strongest in terms of dividend growth in this portfolio. Very solid company in Snap-on. Here's the biggest loser in my portfolio. It's Mondelez International, ticker MDLZ. I hold 23.065 shares of Mondelez. It's valued at $1,377. And I'm down over 11% on this position. It's a nice dividend stock. It's yielding 3%, and I should collect about $43 in dividends, assuming I don't buy more over the next year. Nice dividend growth. Their dividend growth is at 11% for their latest, and I see it as undervalued. So I'm playing the long game with Mondelez. I'm being patient here. I do think it's going to turn around for them long term. I'm going to be pleased with this investment. So the next stock on the list is also in the consumer products sector. It's the blue chip Procter & Gamble, ticker PG. You don't need to say much about this one. All dividend investors know who they are. I held 8.189 shares of Procter at $1,372, and I'm sitting on a 9% gain for price appreciation. PG is yielding 2.4%. Paying me about $33 over the next year. Dividend growth, these guys is about as consistent as it gets. They've been growing that dividend for 68 years. Their latest raise was at 7%. I think that's pretty respectable for a consumer products company like that. They're sitting at fair value, and normally these guys are kind of expensive, so maybe there's going to be some opportunity there in 2025. I sure hope so. I am a Procter & Gamble fan. Another stock I'm a fan of. This is the newest position in the portfolio. Starbucks, ticker SBUX. I took a plunge on it when it had a really bad earnings report, like halfway into the earnings back in May. Today I hold 14.879 shares of the world's largest coffee retailer, valued at $1,357. My timing was good. I'm now up 21%. It just was a no-brainer when it dropped into the 70s. I had to pick, it's just Starbucks, right? It dropped into the 70s. I had to pick it up. Shares are now yielding 2.67% today. Solid dividend growth, latest raise, and at 7%. It's pretty good for this market. I think Starbucks it's a reasonably priced stock today. It's reasonably priced. It's not the bargain it was when it was down in the 70s. If it dips down there again, you can bet I will be adding more. Then we have BlackRock, ticker BLK. This is an asset management giant. I own 1.303 shares. They're valued at $1,335. It's up 38%. It's done pretty well for me. Shares are yielding 2% today. It's going to pay me about $26 over the next year. Dividend growth is historically strong, but this sector as a whole has been pretty awful for dividend growth in the last few years. I have the same problem as T. Rowe Price in my Roth. They're just nominal raises. I think the stock is also overvalued today. I'm not looking to add any more to it anytime soon, but I love this business. Next up, we have Lockheed Martin, ticker LMT. This is 2.741 shares of the aerospace and defense contractors, valued at $1,331. Look, I'm up over 5% on Lockheed. It's not done a whole lot. It does pay me $36 in dividends annually. It's yielding 2.72%. Dividend growth has slowed down a little bit for Lockheed. Their last raise was at 5%. See them as a fairly valued stock at this time. I think there's reason to hold a company like this, though, going into the new year. Just looking at the geopolitical climate, I think Lockheed Martin has this portfolio covered on defense. Then there's the cable and satellite company Comcast, ticker CMCSA. I hold 35.099 shares to be exact. I ought to just go ahead and buy that next thousandth of a share, round it up to nice even 36. But currently this is valued at $1,317, and I'm down over 5% on this investment. It's a solid dividend stock, paying 3.3% dividend. I expect it's going to collect about $43 in dividends over the next year. Dividend growth's nice, 7% for their latest raise. I think it's undervalued, but there's a lot of questions surrounding the future of this company as they're spinning off some of their cable TV channels like MSNBC, which is not fared well in the era of podcasts and new media. And then you combine that with Trump's reelection. And I'm not being political. I'm just saying this is what happened. Their position is not what it was. I intend to spend more time researching Comcast, whether it makes sense as an investment in this era, what's left after they dump these channels. What are we getting out of that? I'll need to look more into that. But moving along, here is one of the two REITs in the portfolio, and that is Agri Realty. Huge fan of this one. I hold 18.608 shares of Agri Realty, valued at $1,310. I am up 11.5% on this position. It pays me monthly, so I should collect about $55 over the next year if I don't end up buying more. The stock's yielding 4.26%. The dividend is pretty slow growth right now, but they have a pretty good history. Let's give them the benefit of the doubt. It's just their industry. It's in a pretty tough spot. I think ADC is fairly valued at this time. I'm excited for what the future holds for this one. Next up, in the lone utility stock in the portfolio, that is NextEra Energy, ticker NEE. I hold 18.248 shares for a total value of $1,308.20. I'm up 4% on this position. Stock price for this one has been all over the place since I've been holding it. Today's shares are yielding 2.87%. I should collect about $37 in dividends from NextEra Energy. Dividend growth has been stellar. That's one place they've been consistent for utility. That's been 10% every year. It's been very consistent. And the plan is to keep that through at least 2026. They keep extending that every few years. It's a good sign. I'm not a huge fan of the sector, but this one stands out as a gem. They're also located mostly in Florida. And that's a growing market. That's a great place to be right now. So I'm happy to be there with NextEra Energy. The next position is Vici Properties. It's the other REIT. They're hotels and resorts, mostly the famous ones on the Las Vegas Strip. I have 44.764 shares in the account, valued at $1,307. I'm down 5% on Vici. December was really what took that one down. It was not kind to Vici. Shares are yielding a nice 5.92%. And it's pretty solid dividend growth for a REIT. Their last raise was at 4%, but the ones before that were 6%, 10%. So they do what they can. They're looking undervalued today. I think this is a great long-term opportunity. I think their properties are I think these print money, frankly. We're getting close to the end here. I definitely own too many stocks. I'm trying to get through them as quick as I can. I do like having a lot of dividend payments spread out. It's finding that balance. I need to perhaps trim a few of these, though, looking through them. Speaking of payments, the next stock in the portfolio is payroll processor, automatic data processing, ticker ADP. I hold 4.144 shares of ADP, valued at $1,213.07. And I'm up 27% on this position. It's quite a solid dividend stock, paying a 2.1% yield. I should collect about $25 here. But look at that dividend growth, consistently paying double-digit raises every year. It's a fairly valued company. Perhaps that's why it's at the bottom, because it's been more in overvalued territory, but its valuation is starting to catch up with a little more. I think if we saw a good fall and bad earnings report or something, I would jump on it. I would love to add more ADP on a good opportunity. Here's another one. The valuation is just rich. It's Aflac, ticker AFL. I hold 11.531 shares, valued at just under $1,200, and I'm up 32%. So it's been a solid performer. Dividend-wise, it's yielding 2.26%. So I should collect about $27 over the next year in this account from Aflac. Dividend growth is excellent. Their last raise was 16%. So that's the largest single raise in the portfolio for 2024. But there's no denying it's overvalued. I would love a better opportunity for Aflac. I love everything about it except the valuation. Then we have Medtronic, healthcare equipment maker. I hold 14.295 shares of Medtronic, valued at $1,141.88, and I'm down about 3% on this position. Shares are yielding 3.51%, and I'm projected to make another $40 from them in dividends in 2025. Dividend growth-wise, they have kind of been stunted. Their latest raise was minimal. 1%, that's, is what it is. Valuation-wise, they are undervalued. I think this deserves a second reevaluation, being on the bottom here, what I want to do with Medtronic. Second to last is Waste Management, everyone's favorite trash company, ticker WM. I hold 5.578 shares of Waste Management, valued at $1,125, and I'm up 13% on the position. From a dividend income perspective, yielding 1.64%, should pay me about $19 over the next year. And from a dividend growth perspective, there's lots to like. Their latest rates was a respectable 10%. And I think Waste Management is fairly valued. It's another one that's not gone as heavy on because of valuation. It has come down a bit here as we ended 2024. I do expect its weight's going to increase in my portfolio going forward. I really do. I'm big on Waste Management. Very bullish on that one. Last but not least, we have Amgen, ticker AMGN. It's a biotech pharmaceutical. I held 4.187 shares, valued at $1,091, yielding 3.45%, and forward income for Amgen is $37.68. Dividend growth is solid. The latest raise was at 6%, and that's historically what they've been doing. Its valuation has come down over the last year. It's one point was too overvalued for me to add to, but it's come down. I do think it is undervalued today. I'm not really crazy about pharmaceutical companies long term. I'm getting more and more leery of just this whole industry from a long-term perspective, just healthcare. So that's it. That's 2 full years of dividend investing, and that's what we got. Today I have $1,074 in income projected over the next year. Here's how that looks. This is my dividend calendar for the next 12 months. It's encouraging to see that even if I don't invest quite what I might have in 23 or 24, I'm going to have an extra $1,100 infused into this account in the form of dividend reinvestment. That is the snowball I'm talking about. And from the selection of stocks I hold, I do expect raises across the board in 2025 to continue. All of my holdings, like I said, did raise their dividend in 2024, although I did dump a couple stocks towards the beginning of the year. And I'll have a full accounting of that in a coming video. I'll be totally accountable for how that did. We'll see where I made the right call and where I should have held. And look, I encourage you, if you've not gotten into investing yourself, make that something you do this year. There's so much helpful information available. You can check out the most popular videos on this channel for some tips on getting started as a dividend growth investor. And I have more on that to come as well. This is your future. And as I've demonstrated, you can get it going for next to nothing and quickly build it up. I wish you all a happy and healthy 2025. Thanks for watching. And until next time, keep investing.